Welcome to this week's Market Minute with me, Andrew Wilkinson, and my guest, Kevin Davitt from the Nasdaq. Kevin, welcome back to the program.
Thank you so much for having me, Andrew. I'm looking forward to it.
All right. We had just had the delayed January employment report this morning. I think 130,000 jobs created, unemployment rate down to 4.3%. Half of the job gains came from the healthcare sector. Now, that's unusual for a kickoff, but outside of the job picture, anything you want to pick on, how's the macro picture shaping up from your vantage point, Kevin?
I think the way you started that with an employment framing is an important one. I believe that some of the concern, big picture about the market, which we've seen kind of come front and center over the past 2 weeks over different sessions, has been over the resilience and kind of the impact of AI and where it might jeopardize things like jobs. Now, over the past couple of years, the market has remained incredibly resilient, driven in large part by the names we talk about regularly that drive the Nasdaq 100 and the market broadly. But the economy largely comes down to consumer spending, and that is driven by people having jobs. So I think your question about the big picture, market's always looking forward, right? Or at least we're told that. And there has been concern about what the next 6 months or a year looks like. And I think a lot of that has been kind of predicated on is this new and this outgrowth of technology going to cannibalize employment? One data point does not necessarily make a trend, but I think I've said this before on your podcast. Americans are very good at a number of things, but in particular, they're good at spending. And your question about kind of macro, I would argue that things are fairly good. And I would caveat that with my general tendency to skew toward what could go wrong. And really today is just another data point, but generally speaking, big picture, it does seem like the economy remains on the rails. And I would say the broadening of the rally is some indication of that, which maybe we get into.
Yeah, I always find that despite the upswing, investors have to continually beat themselves up in order to just kind of, this is real. Things are okay. Kevin, just can you frame the relative performance of equity prices to start the year? What is it? What can you distill from the relative performance of different indices, please?
I think there has been an interesting performance. Okay, so we'll start with year to date, and then, as is my tendency, I'll broaden that perspective just ever so slightly. Year to date, the Nasdaq 100, the index that I'm kind of very excited to support, has lagged relative to things like the S&Ps and the Russell 2000. The small caps have really been kind of the belle of the ball. If you look more broadly beyond sort of US-centric markets, emerging markets have really done exceptionally well. Places in Asia like the Kospi, South Korea doing very, very well. Now, you broaden that perspective and the sort of relative performance looks very, very different. Your question centered on this year has been that small caps and kind of the unloved names have been doing better relative to the names and the indices that have led the markets for the better part of the past 4 years. Now, that makeup, I think, is interesting in terms of kind of what's often called old economy relative to new economy. And going back to the point you and I were sort of going back and forth on just a minute ago, the back and forth and the potential for technology to improve businesses in other areas, I think is a really exciting sort of development here.
What shadow is AI casting over the market at present? On the one hand, there's there are efficiencies to be had, but on the other hand, there's talk of entire sectors becoming increasingly vulnerable to job losses. What are you seeing, and are investors overreacting?
So the real sort of crux of the concern of late has been around software. And that was driven in no small part by advances from Anthropic, the Claude, around tools that it makes it seem like software as a service companies, their business models could be jeopardized. Now, if you look at the performance of some of those names year to date, there are some meaningful drawdowns. And last week, Microsoft was kind of front and center as far as that selling was concerned. Your point about the shadow, I think it goes back to people are looking like, again, we broaden it out and the markets have done exceptionally well from the 2022 bottoms, and myself included. I'm always looking for like, man, it's been a great run. What might I do to protect myself or to position to, to areas that maybe have been unloved? And I think that's going on. If I focus more specifically on the Nasdaq 100 and I look at the relative mix, you see things like semiconductor manufacturers doing exceptionally well this year. So the likes of ASML, Lam Research, AMAT, they're all up like 30+%. Interesting to see names like Micron, Intel, and Texas Instruments doing really, really well. But the names that you and I and kind of everybody has talked about for the better part of the past couple of years, the NVIDIAs, the Broadcoms, the Googles, are kind of middling, up or down 2%, right, for these mega cap names. But what does that mean? It means that sort of money is flowing to different areas of the market. And I would argue, taking a big, broad picture, that is a healthy development. And seeing that torch passed, we got the Winter Olympics going on now. It could be viewed as a good sign. And this is coming from somebody that's always looking for the glass being half empty.
Well, and to kind of stick with the analogies here, I mean, in order for there to be a shadow, Kevin, there's got to be a sun, a light in the background, right?
So I love it. The philosophical angle. We're getting it with Mother Nature, days getting longer. And I think as we move through this earnings season, we will likely see continued growth in earnings, which has really driven, like if you're a fundamental type and you look at things like PE ratios, they have really not expanded. And in many areas, they've contracted over the past year. And so through that lens, right, we move through this Q4, we sort of close the door on earnings for 2025. And I think that look back is going to be quite a positive one. And then we shift our attention to like, what is Q1 going to look like? And generally speaking, it seems like the economy is on the rails and there's been a broadening, a great deal of dispersion, something you and I talk about periodically. And that can be rewarding from a stock picker standpoint, and how that plays out at the index level is something that I pay a whole lot of attention to.
Brilliant. Kevin Davitt, Head of Index Options Content at the Nasdaq. Thank you very much for joining me again today.
My pleasure.
And to the audience, thank you for joining us both. And remember to subscribe wherever you download your podcasts from. Bye for now.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice.